Chris Bates. Welcome to this episode of the Australian Property Podcast.
Hi, Owen. How's life?
Good, mate. Very good. Busy with work, but that's a good thing, I think. How about yourself?
Yeah, no, things are good. New year. It's super exciting. Tommy's 3 and Ellie's nearly 5 now. So almost out of the trenches and socializing more. So excited for what's to come.
Yeah, bloody oath, mate. And also with Alcove and everything you're doing. It's a great time of year, this time of year, to think about property decisions. But importantly, with everyone suggesting that interest rates, I'll insert an asterisk, could fall, now is definitely the time to start thinking about mortgages, as in, should I get one? When do I start that process? How do I start that process? That's what we're going to talk about today. But also, if you already own a home, maybe you're thinking, is it time to upgrade? Should I do a refinance and debt recycle? Should I do a refinance and upgrade my house? Should I, if I'm an investor, now start going on the hunt again? Because if interest rates start to fall, is now the time to start doing that. So this episode's going to be a great primer, foundational episode for anyone that's new, but also if you're thinking about making decisions with your mortgage and your financing. Chris, you obviously were voted number 1 mortgage broker in Australia. So we'll just quickly just insert that in there as a little bit of praise for you, my friend. I've got some quick fire questions in just a moment. But firstly, why is getting a mortgage one of the biggest decisions people make with their finances?
Oh, it's a hard one. I'm going to shoot myself in the foot here and probably say the bigger decisions, what are you going to do with that mortgage? And what are you actually going to buy? I mean, getting the mortgage right absolutely has some consequences if you structure it wrong and you set it up the wrong way and you make some decisions ongoing that it weren't the best. But ultimately, what did you use that money for is probably the most important decision, and making sure that that decision interlinks with your next decision around property, and then it compounds for you. When you get that first one wrong, or even the second or third, that it can be quite costly, particularly in the property market and the share market when you're using loans for it, because leverage is a catch-22 always. So that's why it's probably the biggest decision, because it ultimately allows you to do something with that money, and that could go wrong or right.
I think it's like a magnifying glass, right? So it's like a magnifying glass on the decision that you next make. So if that decision that you're making with that loan is the wrong one, it's going to end badly. If it's a good one, it's going to be a huge springboard into everything else that you do in life, not just your lifestyle and where you live, but also the value of your assets on paper, the next property you can buy, all those different types of things. Now, I did promise some quick fire questions, Chris. Number 1 is, what's the number 1 mistake first home buyers make when it comes to their mortgage?
Well, in relation to their mortgage, it's probably not understanding all their options and just going through what friends, family, even a broker or a bank says, and just saying, yeah, okay, cool, that looks sense. Not really strategically looking at it and debating all the decisions. So, maybe not knowing about 5% deposit home loans, maybe not using LMI, maybe putting a 20% deposit in, and maybe they should have used LMI. Maybe they work in certain industries and not getting 90% no LMI. So there's just not understanding their options and just going, okay, well, my deposit's X. I'm just going to go and borrow Y and then buy something, that adds those two up. And also maybe going a little bit too late as well. Like sometimes people go and try to get some mortgage advice, and it's like, oh, hang on a sec. If I went 3 months ago, I would have been in a much better position, or I could have made some changes, or maybe I shouldn't start that business. So I would say getting on the front foot for first home buyers and just understanding that, what's involved. Sometimes things like repairing, your credit file, because you missed a couple of payments, you can fix those things. So just little things about getting prepared earlier is a good decision.
Yep. So I did all of those mistakes. I left it too late I gave you 7 days basically to get me the money, which remarkably you did. Secondly is my biggest financial regret in life is not buying a property that I could have when I was in my early 20s, because one, I just didn't quote unquote believe property was a way to create wealth. I was indoctrinated into Warren Buffett's wisdom kind of thing. And secondly is that I didn't realize when it comes to strategy, how important your home can be for other things that you want to do. redraw equity and do something with that, start a business, like so many other things. Like I didn't even know for some professions, Chris, maybe a deposit isn't required if you're in a certain occupation, and like all these different things I didn't know. So I just wish I got into a mortgage broker sooner. Now, quickly, I did say that these were quick fire, my friend. So I'm going to push you to be quicker on the next one. Fixed or variable? What's better in 2025?
I'm going to have to double point your last one. Oh, and sorry, mate. I made that big mistake too. I was like you. I was so sold on shares. I was, had a margin loan. I thought shares were the answer to everything. I'd done all my research on that, but I wasn't until I actually got on the other side of the fence as I realized the benefits of mortgages and property and etc. Now, fixed versus variable. Right now, variable, I'll be much quicker. Fixed rates just don't make sense just with the expectations of rates and where they're currently priced. And you could very easily be out of the money. So hopefully that's a quick answer.
Yeah, we're recording in February 2025 for people's reference. There may be a time when that answer changes, but that's the current one. How much should someone really borrow? I feel like this is an open-ended question, but people just punch into those banking calculators, my income, look how much I can borrow. Is that always the right answer?
I'm not very good at quick fire answers, Owen. There's a lot that goes into decision making, and you can't just quickly just put your finger on it. Look, ultimately, in the past, you could, when I started back 2013, 14, you could borrow way more money than you probably wanted to and what you probably needed to, right? So you could probably borrow 7, 8 times your income. There's lots of flaws with bank calculators. You could leverage up to 10, 12, 14 times your income if you knew, ways to play the system. So there's always a challenge between what could a bank lend me and what do I really want to borrow and what should I borrow? Nowadays, it's usually the opposite. Prices of properties have gone up, right? So you need to borrow more than you ever have as a percentage, right? Of your income. But also you can only borrow less. You can borrow 4.5, 5 times your income. So often the dynamic in the market right now today is, can I borrow any more? Would another lender lend me more? And so often most people are going to their max, and what supported prices over the last couple of years is actually intergenerational wealth. Is kids saying to their parents, grandparents, uncles, aunties, brothers, sisters, can you give me any money to help me get in? So that's not really a problem today, I would say.
Yep, I gotcha. So just to confirm what Chris said there, for anyone that's new to this, first home buyers, etc., he said 4.5 times your income. He meant your annual income. So if you add that up, what's your annual income? 4.5 times that amount. Keeping in mind, you probably will have a deposit and those types of things as well. Last quick one for me, Chris, which is sitting here in 2025, offsets or redraws, which is something that come with your mortgage. Which do you prefer?
I'm a huge fan of offsets. They're an amazing tool. They're probably one of my favorite tools, to be honest. And most financial advisors don't really know how to use them, and most people don't know how to use them as good as you can. Reason why they're so amazing is it's a savings account linked to your mortgage. You got full access to, complete liquidity. There's no restrictions on it. And if anything happens, you can always get access to that money. And the benefit is instead of getting interest, it offsets your interest on your home loan, so you pay less interest. It's like you get the better rate, and particularly if it's on a home loan, it's not an investment property, and you don't have to pay tax on that because you're saving interest, but you still got access to liquidity. So you've got the buffer, plus you've got the rate savings. So problem with redraw is there's always potential risk of banks restricting that. There's been a number of cases where banks have done that. ME Bank did it a few years ago and got into a bit of trouble. CBA did some changes a couple of years ago. And also there's some potential down the line tax consequences you can get yourself into where you're paying off debt. So absolutely a big fan of offsets. But ultimately, it comes down to human control. As you get, I think you get more savvy with your finances and your spending in particular. The key thing is making sure that behavioral finance and that we are impulsive people, human beings. And so try to put some restraints on your ability to access your offset account, whether it's banking in a different bank, just so you don't actually get sticky fingers and start spending it on Airbnb like me.
Yeah, fair enough. But offset accounts, very good. It's also included in our free course that we do with Chris and Amy, so you can check that out. We've also done episodes on that in the past. An offset account is something that your mortgage broker can help you organize when you go to your bank. I got the ability to have 99 offset accounts. I still talk about that thanks to what Ben and yourself hooked me up with, and my partner Sarah, what you guys hooked us up with, which was awesome because it was just really convenient for us. Now, I'm going to ask you to just kind of go back to basics for the next 5 steps. So we've broken down getting a mortgage into 5 steps. Now, some of this stuff may be familiar to people who already have a mortgage, but it may also help you understand the process behind it and what actually goes into decision making if you are making an upgrade decision or something like that. But principally, we're talking about first home buyers and people that are looking to get in the market in 2025. Some of the other educational episodes from Pete and Amy challenge you in different ways on investing concepts. But for this one, Chris, we're going to go back to basics. So step one, I've broken down is understanding your borrowing capacity. You alluded to it before. Can you tell us about this? Why is it important? How do we break this problem down?
Yeah, I think those step ones, understanding your borrowing capacity, getting yourself credit ready, and making tweaks to your personal situation to potentially improve your borrowing capacity. And it's sort of understanding, how different banks would look at you. So what a borrowing capacity is, there's responsible lending rules that the banks are obligated to comply with, right? So you can't walk into a bank and say, I want to borrow $1 million. They need to make sure you can afford it. That's kind of the reality. And what every bank will lend you a different amount. They've, got very similar calculators. It's not a big difference like it was when I started. And non-banks, which is sort of none of the, the big deposit institutions, have got some different rules. So maybe they can lend you a bit more money. But ultimately, what you want to understand is, okay, I'm a single or I'm a couple, based on how much income I've got, whether I'm employed, contractor, self-employed, casual, part-time bonuses, how would banks look at that? And then also, how would they look at my current obligations and my debts, my liabilities, my rent, my mortgages, my car loans, my credit cards? How would they look at my situation and go, how much money would they lend me? And I think if you really get an understanding, sometimes you can make tweaks. You can ask for a pay rise at work. You can, you got a bonus coming in September. Maybe you'll earn more money when that hits your bank account. Maybe if you move to a contractor, you could borrow more, not less. If you start a business, maybe you wipe out your borrowing capacity. And so I think it's just a great time to get educated, because borrowing capacity ultimately drives what your options are. There's no point going and looking at a place that's waterfront and it's worth $5 million if you can only borrow 500,000, right? And so just truly understanding your borrowing capacity, what tweaks can you make to improve it? Like closing down credit cards or paying off HEX or closing down small loans or whatever it might be. I think it's a great way to understand, because ultimately the property is a game of borrowing. It's not a game of getting great assets. It's actually understanding how much can you borrow and what tweaks can you make over time to borrow more to then actually potentially buy more assets.
Chris, I like that idea how you talk about being credit ready. I think that's probably the most important thing for people, just to understand what would the bank see when they look at you. And that's where a mortgage broker can coach you through things. Before we move on to the next point, or actually, maybe the next point is valid here. So this idea of like you go to the bank, you get a loan. More and more people are now seeing a mortgage broker. So I'm hoping for step two, I'm hoping most people can understand that maybe it's, well, where do I get the loan? And reach out to a mortgage broker. At what point should someone consider reaching out to a mortgage broker? Or if they do, for whatever reason, want to go directly to their bank, how far in advance would you say for someone to make contact with like your team or any mortgage broker?
Look, speaking to a mortgage broker doesn't cost you anything. Brokers are paid from banks, right? So there's no real, you go, well, I won't speak to them now because I want to save myself $500. It's probably not the case, right? So you can speak to them early and it shouldn't cost you anything. Whether you need to get actually pre-approved, great brokers don't need to get you pre-approved. We don't lodge loans unless they're going to get approved, right? We just don't get to clients. Like if we're worried about it, we just won't lodge it. We'll speak to the BDM first and make sure that they support it. So a great broker will be able to tell you what you can do and what you can't do. And then if you ask questions with them as well, you'll be able to figure out what tweaks can you make to improve your situation. So and so I think they can also run credit checks for you. So they can say, hey, no, your credit file's fine. And they can just give you that. When you are ready to buy, as long as everything stays the same, you can make it happen. And so I don't think there's really doing that early is not a problem, because just gives you that confidence. I'm a big believer in behavioral finance. I think I mentioned it before, right? And goal gradient theory is based on that. The closer you feel to your goal, the more motivated you are. And so just by speaking to a broker, I believe more people are entering actually making better financial decisions because they're getting themselves more excited. They're getting themselves more aware of what they can do. And it's just that next step in the journey. And I think it brings forward the next step because ultimately you've got more knowledge. And so, don't be afraid. Great brokers won't be intimidating or make you feel judged or anything like that. We're all on our own journey and no one's there judging. And we just want to help people make better decisions. So reach out to your broker. And that doesn't have to be us. We're big believers in the broking industry abroad. And it's not just us. 75% of home loans are going through brokers now. When I started, it was under 40. So you can see Australians are voting with their feet year and year after year and going to broking to get some guidance.
It's actually the exact question I was going to follow up with you is like how many people go through a broker rather than directly to their bank. So did you say 70%?
75, I think it is now.
Oh, wow.
And home loan, it's funny though, the banks don't really like brokers in some sense because they've got to pay us. They've got to pay us ongoing. And we actually create more competition, which means that they can't make as much money on customers. Their net interest margin's getting tighter every year. But the problem is lending's getting more difficult. Having to get more creative. Bank policies are getting more complex, not simpler. And customers are really having to borrow more and rate matters more than ever, right? And so as all those things happen, they're all forces that are supporting the broking industry. And and so it's 75 now. I think in the UK it's 90%. So it's heading in one direction, right?
Yeah, that's crazy. I actually think most of the community go to a mortgage broker. And interestingly, I feel like a mortgage broker, if it's a good experience at least, they're kind of like a gateway to more professionals. And what I mean by that is a lot of people, like in our community in particular, are really keen on DIYing a lot of stuff. And we're all about helping people through education and tools and resources. But I also think that once you experience like having a little bit of money, and you mentioned this idea of goal gradient theory, the closer you get to your goal, the more likely you are to feel better for it and achieve it, right? So I think that's also the case too with people with money. As you start to use experts, you start to realize the value of expertise and the value that they can bring to your life and simplifying things. So I think it's a really good step. Number 3 is getting pre-approved. What is it? How does it happen? And why is it important? So pre-approval, tell us about it, Chris.
Look, I think technically you don't need it. Right? So you don't need pre-approval to go and buy a property. Should you get pre-approved before you buy a property? Absolutely. And the reason is that when you do buy a property, you usually pay a deposit, maybe 5 to 10% of the purchase price, and you sign a contract. That contract may or may not have cooling off in it, depending on states and the way the negotiation goes down. Sometimes you have to waive it. And then you're obligated, right? You've got an unconditional contract that you have to settle on this property by a certain date. Now, if you can't do that, because you can't get finance, you might lose your deposit, and even worse than that, they can actually come at you for losses and things like that. So don't ever really buy a property unless you know you're going to get the money, right? So what you should do is go and say, well, can I go get pre-approved with one bank? I don't need 10 pre-approvals. I just need to know that one bank will lend me the money, who's likely to give me a decent rate, who's likely to be a good option. And so what a great broker would do is look at your situation, would go, who can I get a human assessed pre-approval? There's 2 types. There's human, and then there's also digitally assessed, which is auto pre-approved. The problem with auto pre-approved, which is what are the banks are going this direction because it's cheap and its technology can deliver them, is that it's based on making sure that the information you put in there is absolutely correct. And I think brokers can even get themselves caught out here as well because that hasn't been verified by a human. Maybe they've just put the numbers in wrong. And a lot of banks just do auto pre-approvals. You can get them online, etc. Personally, though, if I'm going to go and spend 500, $1 million plus on a property, and my biggest risk is not getting financed, I would want to make sure my pre-approval is watertight, it's delivered through a bank, and it's been humanly assessed, and everything's been checked and verified. So all they need to verify when I purchase is the valuation of the property, which 99.9% of the time should be okay if it's an established property. Off the plan is a whole other conversation. And they just want to make sure, maybe I'm still working, so they just get some updated payslips or something like that. But they don't have to go through my full affairs and just check everything because they've already done that. And so that's the value of pre-approval. You've got that piece of paper there ready to go. If you buy a property today, you know you're going to get finance. That doesn't mean you have to use that bank. This is a big myth, and there's lots of myths in the mortgage market, but is that when you're pre-approved with a bank, you're obligated to using them. Well, no. So if you get pre-approved with CBA and they offer you 6.2, but they're going to say NAB's going to offer you 6, or ING's 5.99, and you can get and you can buy with use ING, then use ING. And so there's no obligation, but you've at least got one option there ready to go, so you don't lose your deposit and you don't lose the property.
So you're saying like if I go through the mortgage broking process, because I didn't actually, I kind of thought this, but I wasn't 100% sure. So if I went through the mortgage broking process with you and you're like, okay, it looks like CBA has given us pre-approval, because you're going oftentimes more than one lender, effectively you could come back to me and say, hey, actually, it looks like NAB's going to give us a better rate. Like when I go to buy and you're like, let's just go with that.
Absolutely.
Right, okay.
You know, and we don't try to lodge multiple pre-approvals. So we say, well, who's going to likely, sometimes you got any lender, the very vanilla loan, you know, very low risk, any lender will lend you the money. And so what we'll do is go get pre-approved at who's likely to give you the best rate today. Rates change. Banks pricing is always moving. 3 months later, you buy. Oh, sorry, sir. I know we got that pre-approval there, but we're going to go so-and-so. They've got a cracking deal. We can go anywhere. Sometimes if you've got longer as well, you've got the ability to choose. So what you try to do is get pre-approved with probably who's got likely to be a really good option right now. But if they move out of market and you get yourself a better deal elsewhere, then they've lost you as a customer. It's their job to give you a best deal. And that's what a great broker will do, is we always, once you get that unconditional, you know, contract or even just the sales purchase contract comes into our inbox, we get on the front foot. Okay, you're pre-approved with so-and-so. Okay, how are we going to structure the loan? Right, what lenders would lend you this? Oh, there's only a couple. Okay, oh yeah, this is a pretty good rate for that. Right, let's just continue with this bank. You know what? Hang on a sec. This is amazing deal going on over here. Let's go with that, because, or we'll ask that bank to match that rate. We can easily just send them pricing, send them to the bank, say, hey, you've got a customer here ready to go, but you need to match that rate. And often they will, because they've already done the work and they don't want to lose you as a customer.
Yeah, that makes sense. So this step 4 is maybe just understanding the loan application process, which I just want to set expectations, which is how long roughly does the loan application process take? Like how long would you ideally want if you were dealing with a customer? Let's just say it's someone that's there's a couple PAYG tradie. So there's one on wages, there's one that's a tradie. In that type of scenario, how long would that process take? And I'm just kind of thinking of them like if they're looking to buy, to set expectations of when they should like be realistic about how long that takes.
Look, it does change over years. I was just trying to quickly bring up a report, which I'm not going to be able to find that fast, but how long it actually takes for banks to assess loans. Sometimes there's a huge flood. If you think 21, 2020, 2016, there's times that banks are flooded. Their credit teams just can't keep up. You know, a simple application takes weeks and weeks and weeks. It's very frustrating for us and for clients. And then sometimes it can be really fast. Look, it depends on what your needs are as well. Sometimes we can go to lenders that are super fast, like Macquarie, who have just got their SHIT sorted, right, from a tech point of view and their business point of view. And there's other banks that are on that journey as well. But then sometimes you've got time up your slide and you want to lodge it with, say, a building society who's maybe a little bit slower in the way they assess loans. And so we can play with speed a little bit. If turnaround times matter more, then we can go down that direction. But yeah, you just give yourself, 2 to 4 weeks. Like you don't really want to be going to open homes on Saturday and then speak to a broker on Wednesday. Say, hey, mate, get me pre-approved for Saturday and, just work your magic. Like, because, you might not have that clarity, right? It's just you might be self-employed. That tradies sometimes are a bit harder. Shout out to the tradies there. Like they're often running their own businesses and, all sorts of stuff going on. And when you are self-employed, you usually go through a different queue. Or if you've got some type of complexity to your situation, you go through a different queue, which are more the qualified credit assessors look at it because it's slightly higher risk.
More experience.
Yeah, exactly. And so give yourself a bit of time. But it does change. Right now, it's not too bad, but it's always moving.
Step 5 is like, it's probably not just, like, this is post-approval. So this is like, okay, I've got the pre-approval, I've got the loan, but this is the thing that really catches people off guard, but first home buyers aren't aware of this, is like, okay, I've spoke to my broker, I got pre-approval, I put an offer in, I got accepted, right? So I've been approved, everything's going ahead. What happens between now and settlement and what happens on settlement day is like, what can I expect? Who do I need to speak to? Like, how does my mortgage broker do? What do they do there? Like, what does the bank do? Like, how does that work? Because a lot of people, this is a big decision for them, Chris. I know for me, it was massive. It was the biggest amount of money I'd ever dealt with for a single transaction. What is that time of someone's life? What does that look like?
From the purchase to settlement and on beyond, right? It is, you're right. It's one of the most stressful parts. So a new team member, Sabrina, actually joined last year, and because he's a head of settlements, she's done thousands of settlements. We're trying to really wow clients in this experience. We've done a good job before, but I think it's something that is extremely stressful. And so when you do purchase, the key thing is it's so emotional, right? Finally agree a deal is don't just go on to cruise control yet. Go on cruise control once you've got your loan docs. And even then don't. Once your loan docs have been sent back signed, go on cruise control. So first thing is get yourself formal approval. So you've only got conditional approval. You can never get formal approval before you purchase something because a bank needs to see a purchase contract and they need to do a valuation. It's a big myth out there. You can't get unconditional approval. Solicitors and conveyancers say it all the time. It's just not possible without the bank valuing the property because they need to know what they're giving unconditional approval for, right? So get your purchase contract, get your valuation done. And then once the bank looks at it and assesses your situation, they'll give you formal approval. Depending on the bank, they'll either, hopefully now they're all DocuSign, digital docs. Then you'll get your email with your documents. So much better than it was signing stuff in the past. It was a nightmare. Lost docs all the time. You digitally sign your docs. And then what happens is you'll get booked for settlement. And that can happen really fast nowadays. It used to be a nightmare. So that's kind of the process. Once you're booked for settlement, what you really then need to do is just usually make sure you got the deposit there ready to go. There's usually a gap. Property price is $1 million. Bank will lend you 800. I need 200 grand to bridge that gap, but I also need to pay stamp duty and some solicitor costs and some adjustments. So I might need 250. So on the day of settlement, you don't actually go anywhere or anything like that. Basically, what you have your money in your bank account, which is usually an offset account linked to your new loan at the bank you're working with. And then that money gets debited, sent to the person who's buying, you bought the property off, and then the loan will get set up on that day. It's all done digitally, a big platform called PEXA. And then that'll get all signed off with the solicitors, and then you go get your keys from your agent, usually on that same day. And so then, a couple of days later, you just make sure your offset account's working properly. You understand when your first repayment is. One thing you usually need to do in there is get your home and contents insurance, particularly building insurance. Yep. Just making sure that if the house burns down or et cetera, the bank's protected. So they usually have a minimum on that. That's usually something you need to do. But other than that, it should be pretty smooth. It's just if you haven't got a great pre-approval or you haven't got pre-approval at all, that can be ridiculously stressful. And that 6 weeks or 60 days or 30 days, whatever you signed up for, can really fly by. And what should be a reasonably unstressful experience can get very stressful.
Yeah. So, and that's actually one of the things that caught me off guard is you have to have the certificate of currency for your insurance. So you got to go to Amy or whatever insurer you get for your home and contents, the home in particular. And so that's one of those little steps. So there are some things you need to do. And like Chris said, the bank needs to know what you're buying. So they'll send a valuer out or get a valuation done on the thing that they're effectively giving the money for. So that's a step that you should know about. But I remember, I was just a pest contacting Ben, your business partner, because I was just like, mate, what am I doing? Do I pick up the keys? And obviously it all worked fine. And the agent brought around some local cinema movie tickets, a bottle of wine and cheese, and said, here's the keys. So that was great. And I think that's the big step is that's where you find out, if you've got a good broker and a good person helping you out, that's where they make you feel comfortable. Chris did say something there, guys, by the way, around, he gave the example of $1 million with a $200,000 deposit. We have done videos and we've got it in our free course. You don't always need the 20% deposit, as Chris would tell you or his team would tell you. There are options. And I think that was one of the myths that I had in my mind was I needed a 20% deposit because otherwise I can pay LMI. Well, maybe some LMI is okay. And that's where a mortgage broker can also coach you through that process and that decision making. So reach out early. Just to summarize these, Chris, we've got number one is understanding your borrowing capacity. Just generally, what can I do for my salary, for my wage? You could get into contact with a broker at this step, or you could just have a general understanding, get that credit readiness, as Chris spoke about. Number two is reach out to a mortgage broker. You don't have to, you can go direct to a lender, but to be honest, I wouldn't do it any other way. Number three is getting pre-approval. And as Chris said, there's a bit of grunt work in there. You're going to need docs, you're going to need this and that. The broker will try and make that as easy as possible for you. Number four is just understand the loan application process. what's going in, how long is it going to take. Don't rush yourself. If you've got a partner, just speak to them about what you need to do, because they may have a business or something like that, which may be slightly more complicated. So again, just work with the broker there. And number 5, there's this period of post-approval where you've got the house and you've been sensible and all that, you've got a good asset, but there is this period of time between when you've got the ducks, you think you got your ducks in a row, and then like a few days after that, you've actually got the keys. It's a really exciting time, but it's also an anxious time. So just ask about that when you go through the process with your broker. Chris, that's a really good set of topics and a good guide for people. There is a link in the podcast player or YouTube description for folks to get in touch and book a free call with Alcove and the team, and just ask the questions, make contact, get to know someone. If you have a broker locally, sure, but if you want a second opinion, definitely encourage you to do that. So go and check that out. Chris Bates from Alcove, mate, this has been a heap of fun. Thank you for sharing some of your wisdom. We'll be back next Tuesday with another episode on how to research property like a pro as part of this foundation series. Chris, once again, thanks, mate.
Thank you, Owen.
Thanks for watching this video on the Rask Network. While you're here, don't forget to like and subscribe so you can get videos each and every day on business, finance, investing, and so much more.